cost of living, my monthly expenses, and multiplies that by 6. So if I said my cost of living is $6,000 for my family, then my emergency fund should be $36,000. Meaning if all ish hit the fan, I know that I have a 6-month runway to still get by to be able to figure things out. For some people, your risk tolerance may be higher, right? Meaning that you only need a 3-month emergency fund. Other people, you may have a lower risk tolerance and you actually need a 12-month emergency fund, right? But after you've established your emergency fund, you do not need to actually be saving money. It needs to be invested. Investing and savings are two different things. Savings is the first step while you are deciding on what to invest in, but saving money, you cannot save your way to wealth. It is at these interest rates, it is absolutely impossible to save your way to wealth. And so let's get into it and talk about how.
Hey, Julian, let me jump in on that point. I like the way. I mean, you made a really good point when you were talking about banks stealing your money. I think that we can drill in on that just a little bit. In terms of understanding how they're really stealing your money. I love the fact that you use that terminology because it's accurate. First thing. Don't forget the other ways they steal your money. They steal your money in the bank the same way they steal money from a lot of professional athletes who are financially asleep, who are not financially woke. All these fees. I mean, bank fees can get ridiculous, and they slide the fees in there because they really need those fees in order for them to generate revenue. Like they depend on that, fees are. There's no guessing game for them in terms of how much they're going to collect in fees. That's not an investment for them. There's no risk reward trade off. The fee is going to be paid whether you're making money or not. And a lot of athletes get hit hard with fees. There was a professional athlete I was consulting with who played for the Utah Jazz, and he was telling me that when he signed with his investment advisor, the advisor wasn't really worried about making a percentage off of his investments. He's like, he wasn't trying to gamble in terms of getting his income. His thing was, sliding in a lot of fees that he thought the guy would sign off on because he knows most athletes don't pay attention. So the fees really kick you in the butt. That's another way they steal your money. But then also, here's what's happened with the economy in terms of monetary policy. Over the last, say, 20 years, since the 90s, monetary policy has been really, really loose. Interest rates have been pushed down extensively by the Federal Reserve. If you guys have access to the Black Stock Market Program, I think you guys do. Log into that, and there's actually a whole module I do on how the Federal Reserve works and how they sort of manipulate the economy using monetary policy. So basically what's been happening is they've been pushing down the interest rates, which is really killing your ability to earn any money on your savings. But here's the thing. What this has done, though, is this has really accelerated wealth building opportunities for certain classes of Americans. These are the investors. Why? Well, because if I'm a saver, I ain't getting nothing, right? My money's gonna sit there. It ain't gonna move because I'm not moving. But if I'm an investor and interest rates are low, that means I can go borrow money cheap and then go invest it in real estate like Julian's teaching, or I can invest in my small business, or I can go invest in the stock market, which has been taking off, and I can go make massive amounts of money off of the money that I got cheap from the bank. So it's a lot like you think about paying interest on money. Think about it like renting a car. Like, imagine if there was a car rental place where you could go rent cars for $10 a week. And you could take those cars and have a fleet of cars out delivering pizzas and Amazon packages for you or whatever. Or, you know what I mean? So with every car, you're paying $10 a week to rent the car, but you're making $500 a week, from using the car to do other things. Well, you can make a killing off of that. So basically, when the interest rates are low, it's bad for those who don't understand investing, right? Because you're getting screwed. But it's wonderful for those who invest, which hopefully everybody in here is an investor, which means it doesn't mean that you cheer on these policies, because actually there's a lot of risk inherent in the way they've actually run monetary policy the last 20 years. But but I say one of the key factors in wealth building is adaptability. And adaptability means, I can't change the environment. complaining doesn't help me, so I need to go ahead and adjust and see where the
Right.
opportunities are.
Yeah, 100%. 100%. Yeah, there's another word that you need to get familiar with. Is called arbitrage. Arbitrage, and arbitrage is where you find those differences. So a lot of people are like, "Oh, I don't want to invest in real estate because I don't want to take on more debt." Well, if you can go get money from the bank at 4% interest rate, but the rental income from that property is actually making you 10%, that difference between 4% and 10%, that's your arbitrage. That's a 6% arbitrage that you can take advantage of, and you can lock in that 4% rate, that cheap money. Yes, we're calling money cheap. You can lock in that cheap money for 30 years.
Yep.
I guarantee you the interest rate is not going to be 4% in 30 years from now. And you're going to be like Doc said, you're going to be wishing that, I wish I would have done that when they told me to in 2019. All right?
Man,
So,
our arbitrage, arbitrage is the secret to wealth, or one of the secrets. It ain't nothing but buy low, sell high. Which we've all known that, right? Just sell it for more than you bought it for, and you're good.
Yeah, period.
Yeah, there's 5-year-olds who understand arbitrage. There was this little young lady. Her daughter was in my children's program in the Black Millionaires of Tomorrow program, and she told a story about how her daughter. She understood arbitrage, where her daughter walks up to her and she has like $50 in her pocket. And now, when your 7-year-old child shows up with $50 in their pocket, your first question is, okay, what's going on? Where did you get this money, right? And she said, oh, well, the way I got the money was I took the bag of Oreo cookies that you bought. And I took each individual cookie and put it in a plastic bag, and I went and I sold each cookie for $1. And because she's 7 and she's cute, people are like, oh, it's just $1, sure, right? So this little girl collected $50. And so she said, so I need you to go buy some more cookies so I can go make some more money. and that's arbitrage. Like, the little girl knew that taking these cookies and basically repackaging it would allow her to re-up at a much higher level, a tenfold profit. Bag cookies cost $2-3. She's making $50. That's a win. You rinse and repeat that process, a million times over. You got millions of dollars. That's where the millionaires and billionaires come from.
For a long time, I thought I needed a novel idea that the world had never seen, and I think I spent a lot of time searching for that novel idea. And there are just ways that you can go make money that people are making money. I mean, when you see any truck driving past you and it has a business on it, that's somebody going and getting money. For me, mine started out as Now Laters. My mom got me this $10 jar of Now Laters from Costco, 100 Now Laters in it. That's 10 cents each, and I would sell them at school for 25 cents. That's a 150% return on investment. Like, that's what it was. You know what I'm saying? Yep. So real estate is one way to do that. Multifamily real estate.